Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. An interesting week in the sense we're going to talk outside of the cattle market briefly, because as we were talking before this program, it does kind of set up for what we saw in the trade. And that's been what's been happening not only in country, but out of country with all these banking situations. As you can see, Brad Kooima joins me with Kooima Kooima Varilek out of Sioux Center, Iowa. So how does the current banking situation affect this cattle market?
Well, thanks for having me on. I'd much rather talk about cattle weights and the weather and
I know
how many cattle the stuff that I work hard at. However, it's a little bit like if you go to SeaWorld, there's those first two rows, they warn you that if you sit here, you might you're in the splash zone, right? Cattle, notorious for being in the splash zone. And what I'm trying to say is when there's uncertainty, you don't have to call your broker. You don't have to ask around. Uncertainty is bearish cattle. It just is. And does that frustrate me? Of course. But either you learn or you lose. So the uncertainty that was created by a couple of these bank failures, as well as, in California, and then the one yesterday, everybody seemed to be real worked up about the Swiss bank. That one was particularly irritating, I thought, because that bank has been kind of hanging by a spider web for several years already. They did get bailed out overnight. So that, was a little bit of a calming influence. But so the worry, of course, is that what if this turns into a big issue like, what was asked by customers and others, and I heard some commentary that, oh no, what if this is like 2008? We certainly don't want to go through that again. I do not believe, nor do I, people that are much, much smarter than me, and that includes just about everyone when they're talking about economics. I'm a cattle guy, but when I resource some of these people that I've known for many, many years and say, okay, what do you think? And I don't have anyone that I think is savvy that thinks this is anything like 2008. This is a couple of isolated incidents where it seems like poor management, very poor management, was done by a few people, and so I'm hopeful that we can kind of get this in our rearview mirror. So yes, that was the risk off break of $5, $6, $7 or whatever that was here that we had on the cattle, and we were at a big price, right? Second biggest price here in history. So those breaks come a little easier, and we had a big long fund position. And as April is starting to liquidate that, I would say as of today, now April's open interest will be down less than August, which is a good sign. I think, that maybe it'll be a little calmer now, but good action today. But that's why we got here, with that big risk off type attitude that the market took.
Since you're talking April, what are we looking at for spreads right now with April?
Well, the way the February and April relationship, when February is still on, February-June relationship, I love the way that thing traded because February just took off and it was the leader. Today, I was real happy with that as well. The April-August spread is the one that I watch mostly. That's been caught in a trading range, Susan, between $5 and $6. And we're right in the middle. We closed at $5.77 today. I think a breakout over $6 would set the deal. Or I think what would happen, I guess, is April will gain on the back months because everybody's still worried a little bit, right? Plus, we got a lot of cattle on feed for summer. I mean, who's kidding who? We killed all the cows, but we put all their calves on feed. So I could very easily see that the April. I apologize. We got an Amber Alert on my cell phone. Sorry about that.
That's what it sounded like. Yeah.
Anyway, back to our spreads. Sorry.
No, you're good.
That's a decent sign. It's good for the market too. It's healthy because if you think about it, the back months, when you're trying to buy feeder cattle against a very high price deferred contract, the feeder cattle stay very, very high. Now, I'm sure you got some listeners that are cow calf people that are, like throwing empty beer cans at me now, but it's okay. Yeah, it is what it is. So I like the fact that April let us out of the market here today, and I just thought the other thing I liked today was that strength in the feeder cattle. Wow, up over almost $2 higher on April feeders, a great sign, I thought.
So where are we at when you talk about these supply numbers? We were talking ahead of time that we might be on the shorter side, but how short is short right now?
There's this much difference between not enough and too many.
Yeah. Okay. That makes sense.
No, but you ask a great question. I'll see if I can give you a mediocre answer. Okay. So for what? 3 years, we sat here every time we had a cattle on feed report as well. What's it going to be this time? 103, 3% more, 2% more, 1%. So now all of a sudden we're running into pretty consistently where we're 3% less generally on feed. Now this next report's going to be down even more than that. I think we've had 6 months in a row with placements being down. We're finally getting to the point where we're running to the end of this course here, where you cannot kill cows for 2.5 years without having less cattle. It's just it can't happen. Okay. So last year was a record cow slaughter. Everybody's dwelling on that, but don't forget that the year before that was the third biggest ever, second only to 2011. And the year before that, it was pretty big. So we've had extremely high price feed, and we've had the drought. Both of those things that complemented or created this liquidation. So I don't think it's even debatable that there's less cattle. It's how much less. I would say conservatively, as you get to the fourth quarter, which I think is really our biggest upside potential, at least from a supply side standpoint, I think we could be down 5 and 6% year on year. And that's obviously that's impactful. I'm curious how we're going to handle this summer, particularly if feed would happen to get a little bit cheaper. Let's keep an eye on that. Average weights, like this morning again, average weights down 5 pounds from a week ago and down 24 pounds from a year ago. It's a big deal. Carcass weights. So we're still very, very current, and that's a great sign. That gives us leverage.
Can boxes continue to do well?
The Packers always bearish the boxes. That's his story. Oh gosh, we don't know if we can move the boxes up here. If I had to guess the next $2 move on box beef, I would guess lower, but there's plenty of margin here. I'd say the Packer conservatively making $100 to $150 a head, and it's probably more than that for the big integrators. The demand is not just good; it is great, in my opinion. So I'm not really too troubled about that side of the market at all. Rumor has it it's supposed to warm up sometime, right? 4th of July. We've got just horrible weather here right now. It rained all morning. Now it's snowing. And, it's crappy, but it is the middle of March. So the next move on the beef, we may horse around a little bit for another couple of weeks, but then we start to go, okay, what are we going to buy for when it gets warm? What are we going to buy for Mother's Day and the grilling season and Father's Day and Memorial Day? So, whatever little weakness we get here now will be temporary, in my opinion.
All right. Last but not least, can this momentum we've seen in the cattle, can we pull that into next week's trade?
I see, with the size of the show list, I see no reason why we would think that you would settle for less money for cash cattle.
Okay.
I understand if you're in a hedge-oriented deal like the South claims to be always, that they'll be a little easier sellers because of the April cattle at 162 something. They might say, well, I'd be willing to take 164 because of the basis. Okay, I get it. But you only kill them once. So I think I don't see us taking much off this cash market. If we do, I'll be disappointed. The other thing I'm just going to mention here is, let's stay united with this 14-day delivery thing. Don't let these packers jump out ahead of you and try to get a cattle bought a month ahead. They do that because they're afraid they got to pay more. So, I like this way to have a little bit of leverage. Let's keep it that way if we can do anything about it.
All right. Sounds good. Appreciate you joining us this week.
No, me too. Yeah. After trying and failing a little bit. Mostly me because I was goofing off.
Yeah, you're perfectly fine. You're allowed to do that once in a while. We just want to remind folks quick that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.